Today we're going to take a look at, that's right, the Vanguard All World High Dividend Yield ETF. I've done a lot of research. I'm looking for something that pays a nice regular income and is safe and has potential for growth. And I think I've come up with the correct one here, and this is the Vanguard ETF. The ticker code is VHYL. It tracks the performance of the Ftse All World High Dividend Yield Index. It invests in these securities or shares. The regions, the companies whose shares that Vanguard trade in, invest in rather, the highest proportion is North America, as you probably would expect. Very forward-looking industrial country with lots of high value companies that pay dividends. That's 47.5% of the total holding. 25.1% is in Europe, 15.7% is in the Pacific, 11.3% is the emerging markets, 0.2% is Middle East, and 0.1% is the other. The three largest holdings are held in the following countries: USA 43.6%, Japan 7.9%, which quite surprised me, and UK 7.6%, which didn't necessarily surprise me. So the biggest holdings are held in the US. The three largest sectors that the stocks that they hold are involved in are financials like banks, etc. 25.1% of the total holdings. 11.7% is healthcare. Healthcare is always going to be making money, and 11.2% is consumer staples. The fourth, I thought I'd just include that, is energy, which I did quite well expect, 10.4%. The top 10 companies that Vanguard hold, and the percentages of their total proportion of the portfolio, is ExxonMobil Corporation 1.84%, Johnson & Johnson 1.65%, JP Morgan Chase 1.57%, Chevron Corporation 1.29%, Home Depot 1.29%, Nestle SA 1.26%, Merck & Co Incorporated 1.04%, AbbVie Incorporated 1%, Pfizer Incorporated 0.96%, and Bank of America Corporation 0.96%. I think most people will know all of these companies. What has also reassured me that this is a good investment is the dividend payout. Is what we're looking for, is 3.56% per annum. So for every £100 you put in, or $100, you'll get $3.56 back per annum, and you'll still keep your capital that you've invested. This is paid out every quarter in December, September, June and March, so you get 4 paydays a year. The current price of the stock, or one stock, is £49.58. The 52-week range of price has been £45, £42 being the lowest, highest £50.53. So it's nearly at its highest figure at the moment. The price to earning ratio, this is something I always look at when I'm looking to invest in stocks, is 11.2. This is the number of years of earnings to cover the current price of the stock. So in this case, that would take 11.2 years of earnings to cover the current value or price of the stock. That's just one way of looking at what this price to earning ratio means. Some say a PE of less than 20 is good. So we're on the right side there. The price to book ratio, another ratio that I always look at when I'm considering making an investment, is 1.7. Anything less than 3 is considered good value in respect of assets and liabilities. In my research, I came up with this statement, which sort of sums up or confirms what I've been thinking. Investors seeking capital preservation, steady income and low costs would do well to keep a dividend ETF in their portfolio. I keep mine, or one of mine, on my Trading 212 account. If we scroll down to my investments, I currently hold 4.058439 shares, current price £201 and 10 pence. I'm up £1 10 pence since I started investing. And if I go to history, this will give you the performance, or what the stock holding has been up to since I invested. We're now in the end of February. Back in December, I got a £1.39 dividend payout. Then in November 2022, I bought £200 worth of the stock. I did fiddle about with it earlier on in 2021, where I bought an amount and sold it, but for today's purposes, we're just looking at the £200 I invested back in November and the dividend payout we had in December, and we're now at the end of February 2023. And as a part of my long-term strategy, I have decided to invest in passive income stocks that are secure, that pay a nice dividend and potential of capital growth. And what better than the Vanguard Ftse All World High Dividend Yield UCITS ETF, ticker code VHL. So I think there's no mistake in what I'm up to looking at the screens. So I'm going to go for a buy, and I'm going to invest £200. £200. Review order. And we've got here, it says Vanguard Ftse All World High Dividend Yield, order type market buy. That means that the markets are closed at the moment, so when the markets open tomorrow, the transaction will be carried out. £200 worth of shares, number of shares will equate to 4.036 based on today's price, no commission charged, so it'll be a £200 invested. Send by order, and that should come up here. There we go. The buy order is at market rate, so when the market's opened, and they are traded on the we'll find out when the markets open. Markets in 12 hours 14 minutes the markets will open. So there you have it. This is one of my long-term or investment strategies, where I can have safe home for my money and when I need to, I can draw the income. For the time being, I'll reinvest the income in buying more stocks, but in the longer term, when I need an income, I will resort to using my dividend payouts and not touching the capital sum. So that is today's investment idea, or part of my investment adventure. Till next time, I bid you a really successful investing adventure.